Imagine a building. Its foundations are cracked. Its columns are shaking. While the residents flee in panic, some people are investing in that very building. Is it madness or a hidden plan? Today, we're going to analyze from a psychological and paradoxical perspective why billions of dollars are still flowing into China, a country now seen as the crumbling building of the global economy. The most populous country in the world, a superpower that seemingly rose from nothing over the past 30 years. But now, real estate giants are going bankrupt. Youth unemployment is surpassing 20%. Growth is grinding to a halt. In short, China's economy is shaking and cracking. But something strange is happening. Investments are still pouring in. The world's biggest funds continue to pump billions into China. Isn't this a contradiction? Today, we're looking for answers to this striking question. If the Chinese economy is collapsing, why is money still pouring in? And the answer lies not just in economics, but in the human brain. The risky market investment paradox. Economic theories tell us high risk, low confidence means a market to avoid. But investor behavior sometimes does the exact opposite. This is called the risky market investment paradox. In China, massive construction companies like Evergrande are collapsing. Millions of housing units are rotting away unfinished. Consumer confidence has hit rock bottom. Yet BlackRock, Goldman Sachs, and even funds tied to European central banks are continuing to invest in China. Why? Because this isn't a paradox, it's a strategy. And that strategy is fueled by psychology. Contrarian bias. The instinct to go against the herd. A significant portion of investors see moments of crisis as opportunities. If everyone else is running away, maybe now is the time for me to buy. It's simply the buy low, sell high logic. But the truth runs a bit deeper. When the human mind makes a decision contrary to the majority, it gains a sense of control. It feels smarter, braver, more visionary. And that feeling becomes the engine behind investment decisions. If it looks like China is collapsing, for some, that actually means a new China is being born. Hopeful projection. The tendency to project hope onto a hopeless outlook. Investors don't just look at today's data when investing in China, they invest in its future potential. 1.4 billion people, a tech production powerhouse, massive state-backed projects. Even when everything seems to be going wrong, the investor's mind thinks, but what if the turnaround starts now? It's like the gambler's fallacy. You're losing, but you say, just one more hand, because if things turn around, you'll win big. And that's why investors are still pumping money into a falling dragon like China. The war between emotion and rationality. Financial decisions are often made not with math, but with emotion. Investing in China is no longer a matter of analysis. It's a battle of belief. Some say, if China falls, the world falls. Some say, those who buy at the bottom win. And others are investing simply because everyone else is getting in. So instead of rational data, group effect, charisma effect, the illusion of opportunity born from crisis takes over. That's why even though the Chinese economy is trembling, investments are still flowing. Because money is often driven not by fear, but by hope. So is this a strategy or a massive mistake? Time will tell. But one truth remains: finance is a world filled not just with money, but with psychology, belief, and paradoxes. And that world doesn't always act logically, but it always remains loyal to human nature. Thanks for watching. If you like this kind of analysis, don't forget to like, subscribe, and share your thoughts in the comments below.